Thank you very much. This is a very Vishesh interaction we are having with you. Thank you so much for your time and this opportunity.
Thank you for having me. It's a real pleasure to be here.
Great. On ET Now, mostly we are discussing here and now because that's the flavor of a business channel, mostly near-term investors. But with you, I can really have a long-term view on India because your firm has been doing so and also got rewarded also for being a partner of various managements here in India. But before we talk of India, I want to understand a lot of stuff is happening on the global landscape as well. I mean, just over the weekend, we saw what happened in US. And over the weekend, of course, now the US economy is factoring almost 90-100% chances of a rate cut over there. Foreign investment overall on the FII side has been eluding India for some time now. And then, of course, September, October, we are heading into a US election, which leads to a lot of uncertainty on flows into emerging markets. How is the US economy, in your view? How important would it be, the change of guard at the presidential level? And of course, the rate scenario, because you have a very large position there. In fact, the largest of all the portfolios.
That's right. So our, the annual results that we declared showed us that the US is the largest proportion of our AUM globally. I think to your specific question, I would say that, as we think about forward-looking investing, one of the key risks we see is that of geopolitics, right? And today the world is unfortunately a much more volatile place than it would have been in the past. I think what happens in the US is anybody's guess. But I think what we look for as investors is predictability of policy regimes, continuity of policy regimes. We've seen, both types of regimes in the US in the last 8 years. They have alternated, and we believe that, while there will be some nuances that may be different, but we've seen this story before.
Sure.
And so, from a growth point of view, we believe that, the US has been extremely resilient in its growth. The much anticipated recession that was expected to happen has not happened. Inflation has been sticky, but it is also coming down. And, and we believe that going forward, the rates regime may reflect the softening of inflation. So we believe that, on the whole, the global growth environment is likely to be, a lot of, more of the same. So we've got to be watchful. But on the whole, we are cautiously optimistic on what it means for us.
RBI governor recently at a Bombay Chambers anniversary mentioned that we are at a cusp of a structural shift in India growth. We may be headed to closer to 8% on a sustainable basis. In fact, this comes in the backdrop of 2 readings of above 8%, which was also not expected by most. What are your thoughts on the quality of growth in India when you speak with your portfolio companies? And do you see this to sustain high growth, moderate inflation environment?
Yeah. So look, maybe I'll just step back and give you some context.
Sure.
We've been in India for 20 years now. This is our 20th anniversary of being present on the ground in the country. And we've been, we've been great beneficiaries of the growth that India has seen in the past. India has some factors that make us extremely optimistic. The demographics. We have a young and large population, which is very aspirational. We have great quality of entrepreneurs. We have great management teams, right? And they are managing not just Indian companies, but even companies globally. And then we have a stable and predictable policy regime. We believe that a combination of all this has caused Indian growth to remain pretty high. We are the fastest growing large economy, and we believe that is likely to continue. The factors that I talked about will continue in the future, and and our portfolio reflects that as well. So we have in the last year we invested $3 billion US into the country. And we believe that basis opportunities that we are seeing today, we can invest, $9 to $10 billion over the next 3 years. And this is just what we can do directly. But our portfolio companies in Singapore and elsewhere in the world are also investing in India on top of that.
Okay.
So we are quite optimistic about the market. As I mentioned to you, for the last 10 years, India has been the best performer globally for us. And that again is a factor of the growth in the market, the stable macros, as well as our long-term capital.
And of course, the superior growth performance of your portfolio companies as well. That's the alpha creation element. But I want to talk to you about something. When you talk to Indian companies now, one dilemma in at least the listed world, which I'm talking to a lot of fund managers are facing, is that the valuations have run up. But when valuations actually run up due to superior performance, they run up in the private space as well as the public space.
Absolutely.
So when you're looking for scouting for new investing opportunities, are you also feeling that part of the exuberism is now getting into valuations even in private side?
So I think this is a very relevant point you brought up. Clearly, if you look at the valuations in aggregate at the index level, they are higher than what they have been historically. However, we don't invest in the index.
Sure.
We are a very bottom-up investor. We invest in specific opportunities. And we believe that at any point in time, there are always pockets of overvaluation and pockets of fair valuation or undervaluation. And it is our job as investors to find opportunities that blend in well with long-term thesis, our long-term drivers, trends that we follow, and are also valued at the right numbers, so that we can make sustainable long-term return.
Right.
Right. So it's a bit, I would say, a glass half full. But I think on the whole, we are quite optimistic about our type of capital, finding the right opportunities, and that's why we are. We've had our best year ever in terms of investments last year.
Great. Okay, let's talk about certain areas which you are invested in, just to get a highlight of what's happening. Hospitals is as a space where you have very large investments here in India. Indian healthcare space, I would say, not just hospital, have got very widened now. Diagnostic companies are sizable in opportunity. Earlier just pharma. So diagnostic chains, hospital chains, regional hospital chains are coming up. Then of course technology-backed, pharma dispensers.
Yeah.
What kind of growth are you witnessing in the full value chain in the healthcare space, and what are your thoughts there?
So I think you've pointed out exactly correctly. The entire value chain is a beneficiary of better diagnostic capabilities, more affluence, and also unfortunately poorer lifestyles that we lead today. We have invested across the value chain, right from Manipal hospitals to Medanta, which are multi-speciality hospitals, to single speciality hospitals like Cloud9 and Dr. Agarwal's Eye Care. We've also invested in the pharmaceutical side of things, as well as the diagnostic side of things in Mole Bio. So we believe that this is a structural trend. It is very much in line with one of the 4 key trends that we follow. The 4 key trends being digitization, increase in consumption, longer lifespans, which this ties in very beautifully to, and sustainable living. And we are seeing that that the entire hospital ecosystem went through a cycle of capacity expansion. And now they are reaping the benefits of utilization as that builds up. India is also becoming a hub is becoming known for the quality of its medical treatment, and is attracting a lot of medical tourism, as the term is, right? And so we believe that our investments are helping the country and helping the ecosystem expand, and obviously they're helping patients in terms of better outcomes.
Right. Let's talk about financial services. You have investments in a lot of private banks listed. So now the thing is that when we analyze large private banks, they are one of the biggest contributors in earnings in the market, index and otherwise. But they've not been performing very well the last 2-3 years for some reason. And this is despite their return ratios very healthy, NPA is very much under check, and good outlook. What are your thoughts on where the credit cycle is heading? How are some of these large banks, the top 3-4, are being managed, and the growth levers which lie ahead for them?
Sure. So look, as a context, we believe that our exposure to the banks is a proxy to increase in consumption. Because a lot of consumption needs credit. Consumers need credit, companies need credit to expand capacity, and so the financial services play for us is a play on increasing consumption. We believe that some of the large Indian banks are probably the best managed in the world. If you look at their return on equity ratios, if you look at their ALMs, if you look at how prudently they're managed, we also believe that they are they're very well regulated. The regulator is always cognizant of making sure that systemic integrity is pristine. And so all of these things make us quite optimistic about our bank's portfolio. I think you're right that they haven't been as exuberant in terms of multiples as some of the other sectors in the market, but maybe that's an opportunity.
Sure, but you're comfortable holding them for the long term. That itself is. Let's shift focus and talk about consumer tech. There is so much activity happening in consumer tech. You have exposure to a large food delivery company, which like many other consumer stocks, first saw a very good response in the street, then again complete denial, and now the numbers are coming back because the profit consciousness of the management has really awakened big time. What do you see as the growth levers in front of food delivery and speed delivery, all of those things? How do you see the scope of that in India?
Yeah. So look, I will answer a larger question. Sure. While answering this one, I think the life cycle of startups, right, early stage companies, is now nearing one end of a phase, right? So there was a cycle when they all raised a lot of capital and they all had a lot of resources to go out and do their what their mission was, right? It was to really change habits, to create jobs, right? To increase revenue for their merchants, right, which were restaurants in this case, right? And I think they have had a very interesting journey over the last many years, and I think a lot of the startups, not just Zomato, are now at a point where they have become sustainable businesses. They have started generating profits, and so they can continue to fulfill their mission without depending on external capital. Right, and this I think is a very good inflection point for specific companies, but the ecosystem as a whole. The thing about when habits change is that there's a famous saying that we always overestimate the short term, but we always underestimate the long term, and we believe that there's a lot of penetration headroom yet to come, and the capabilities that companies build in this journey will help them execute on the next big opportunity. So, for example, quick commerce, right? Quick commerce as a business did not exist 3 years ago, right? Today it is driving a huge amount of value, not just in the markets, but it's changing consumer habits. It's changing the way merchants do business, right? And this learning will then be used for the next big thing, right? So we believe that investing in early stage companies, when done in the right manner, leads to so many other benefits, not just for investors but for the ecosystem as a whole. And we believe that India is at the cusp of beginning to realize some of those benefits now, not just in our companies but in the ecosystem.
Excellent. Similar one sunrise sector is the entire EV ecosystem. You invested in one two-wheeler EV company earlier, which is IPO bound. But I want to understand, how is the EV phenomena taking off in India? Is there acceptance among the consumers?
Yeah.
And how are EV companies managed? Because people almost wrote off the ICE engine two-wheelers earlier.
Yeah.
But they themselves started incubating a lot of EV under the hood.
Correct.
And now they're becoming sizable. So I want to talk to you about what's the outlook on two-wheeler as an ecosystem for EVs.
Yeah. So, we invested in two EV companies, one in the two-wheeler space and one in the four-wheeler space, which is M&M's EV business.
Yes.
Our belief is that, the EV sector is very well aligned with sustainable living, right? If you look at it from the consumer's point of view, the cost of running an electric vehicle is a fraction of that of running an ICE vehicle, right? So it makes a lot of sense from a consumer's point of view. If you look at it from an environment point of view, the emissions from an EV vehicle are obviously much lower than that from an ICE vehicle. However, so we believe that in the long run, the trend towards more use of EV is going to continue, is going to sustain. Is the entire infrastructure ready? No. right? So is the battery infrastructure, charging infrastructure ready across the country? No. And so there may be volatility in the way that penetration increases. But I would say that, we've been positively surprised. Just to take two-wheelers as an example, I think the, first meaningful sales of electric two-wheelers started only maybe 20 months ago, right? And from there to they are already at 6 to 7% of market in terms of volumes. And in terms of the premium segment, they are much more, right? So we believe that because of the economic imperative, electrification is a theme that will sustain, and we believe that there will be a lot of value created, not just in our companies but across the ecosystem.
Great, Vishesh. Thank you so much for joining us today on the show and sharing Temasek's view on the world and, of course, more importantly, the Indian investing ecosystem. Thank you so much for your time.
Thank you. It was a pleasure.
Guys, with that, it's back to you.
If you like this video, then like, share and subscribe to ET Now.